So there's stocks and bonds, and anymore you used to get a certificate that this was your stock certificate. Now it's just an electronic thing that TD Ameritrade holds for you, or any of these other trade desks hold for you, that are in your mortgage account, that you never really have an actual share. You don't have, you've got electronic, right? So let's talk about some of the problems. Let's talk about some of the pros and cons with that, right? So typically stocks are fairly liquid, right? Because you can place a trade, you can do an after hours trade, you can do a limit, you can do, you can do a lot of things where you can get that converted back to cash at Scott's Trade or TD Ameritrade, uh, and then have that cash sent to your bank account. So you can, within 24 or 48 hours, sell a stock and get cash, right? So it's fairly liquid, but you have little or no control over what makes it valuable, and you have little or no control over the parent company. And sometimes, as people found out in the market meltdown of '08 and '09, sometimes there was no liquidity in it because nobody wanted something that was falling through the floor, right? And so it has its deals there. Uh, it's also does not allow for much leverage, right? So if you're an active trader, I think you can get a 20% margin account, maybe a 25% margin account, but there comes a point when you are into $100 worth of stock for $100. So you don't get much leverage with that. So maybe you're buying $120 worth of stock with a $100 bill and a leverage account. So there's not a lot there. There are some tax benefits, right? You can that stock can go up, it can go down, it can go sideways, and it's not taxed until you sell it, right? There's also stocks that pay dividends. Idaho Power is a local one around here. PG&E used to. I don't know if they do now. Kennedy Wilson is a REIT that pays a dividend. That dividend isn't taxed as ordinary income. It's a dividend, so that tax rate is less. So there's a benefit to that.